Here's Barry.
Thanks. Actually, I have a couple items. First, on TCI, which we, in spite of the deal, continuing to leave on the recommended list. Really, for a couple of reasons. Upon further analysis and sort of reflection on the terms of the announced Bell Atlantic TCI deal, we're increasingly positive, actually, on TCI stock. We think there are several ways in which the shareholders actually could receive more value for their TCI shares in the Bell Atlantic transaction than many think, and then was implied by the company press release, even ignoring the possibility of a higher bid from a third party. The first first reason is the value of the new Bell Atlantic Class B shares, the non-dividend paying shares for 5 years after the deal closes, has been set at $54 for the purposes of using the stock as currency to redeem the TCI shares. If the present value of the 5 years of foregone dividends is around $11 or $12 per Class B share, it suggests that Bell Atlantic regular class of stock must trade at $65 or $66 in order for the real value of the Class B shares to equal their stated value. This provision is obviously a two-edged sword, though, in the sense that if the price of Bell Atlantic stock materially exceeds $65 or $66, it would represent a windfall for TCI shareholders. With the stock at 60 before the opening yesterday, obviously it was a concern for a lot of investors, but with the stock closing essentially at over 65, the issue appears to be much less of a risk. In fact, we view it actually more as an opportunity in the sense that A, Bell Atlantic stock has already seen a significant jump, and B, it has probably close to a year before closing of the transaction during which it can appreciate further. And with the increasing excitement about the combined company and the higher profile that John Malone is likely to take with traditional telephone company investors, we think it's possible that the stock could be significantly higher than the $65 or $66 break-even, quote-unquote, price a year from now. The second reason we think you could actually end up getting more money is that the actual ratio or fraction of a Class B share that TCI shareholders will be paid for each TCI Class A share is based on 11.75 times annualized TCI cable system operating cash flow for the 3 months immediately preceding closing of the deal. And then, of course, public market value for the programming assets and TCI's cost for international cable. While the Bell Atlantic press release estimated that this would come out to a ratio of 0.65 shares of the Bell Atlantic Class B for each share of TCI Class A, we think the number could end up higher for a couple of reasons. First, as time goes by, it's becoming increasingly clear that the new cable rate regulation rules are having less impact on cable cash flow than originally expected, as the industry and TCI in particular become more adept at circumventing the rules. For this reason, we think that cable cash flow for the company could exceed the current expectations by the second half of next year. And secondly, TCI has always had considerable discretion in allocating certain expenses, in one quarter versus another over the course of the year. And since the 11.75 multiple is applied only to 1 quarter's annualized cash flow, certainly conceivable that TCI would err on the side of maximizing the appropriate quarter's cash flow at the expense of a subsequent or previous quarter. It's pretty easy for them to do. So overall, we think there is a good possibility that the total consideration that existing TCI shareholders would get sometime probably a year or so from now could exceed the $35 per TCI share number, which seems to have been emerging as a consensus figure. Did you talk about the conference call?
Yeah, I did mention the foreign call-in number, though. If you want to
there's also on the conference call, there's a foreign call-in number that's 303-694-3471. Let me also do quickly on CBS, which reported yesterday, and we're raising our estimates for the company. Our new estimates, excluding all non-recurring items for 93, is $16, up from $15.50, and for 94 is $20.50, up from $20. And frankly, even though the estimate increases are fairly modest, we continue to believe there is maybe some additional upside potential, because the company just seems to consistently beat our estimates every quarter. Basically, the clean number they reported for the third quarter, excluding all non-recurring items, was 402 versus 264 last year. And we had been carrying a formal estimate of 350, although we said we thought it might be closer to 375 when they reported, but of course it's even better than that. And really the particular strength, overriding strength, is coming from the network, where network revenues are up 15%. We thought they'd only be up about 10, and of course there's tremendous operating leverage there. So we continue to, in spite of the strong move we've seen over the last several months in the stock, we continue to like it a lot, continue to recommend it, and think it could easily get well over $300 over the next several months. So are there any questions on either of those items?
Barry, going back to the TCI, Bell Atlantic, if the Bell Atlantic stock price moves up, is that 0.65 a minimum, or can that also decrease?
The 0.65 is, you know, can go up or down. The 0.65 was just an estimate based on what they thought the cash flow at TCI would be by the time of closing. And it's always applied. It has nothing to do with the Bell Atlantic stock price in the sense that the Class B stock price for currency value purposes is set at $54 a share. So what I'm saying is if Bell Atlantic stock price goes up, the real value of whatever that ratio times 54 is ends up being higher, because the 54 is just a stated value, but the real value of that number could be more or less depending on the stock price of Bell Atlantic. But that has nothing to do with the actual ratio, or the 65% number.
Barry?
Yes.
Does Malone get cashed out on his TCI stock a year from now, and after that, what are his options, or how is he compensated? Is he just compensated in Bell Atlantic ownership?
Yeah, you know, basically all of Malone's wealth now is in Liberty Media. So the way it's going to work now is he'll get his Liberty Media shares exchanged for TCI stock, and then subsequently he will get those shares exchanged for Bell Atlantic stock when the merger is completed. So he will be the first or second largest shareholder in Bell Atlantic. I think he'll own about 4% of the stock. Bob Magnus, the chairman of TCI, will also be a very large shareholder, and that basically he'll be, you know, I don't know what the plan is with respect to options or, you know, incentive compensation related to that once the deal closes. But right now he would get Bell Atlantic stock. Anything else?